traders, welcome to your 7-minute market update utilizing technical analysis to predict direction based on human emotion. Today is May 31st, 2012. Let's get started. This here is a chart of the SPY, which is the ETF that tracks the S&P 500. So far, what we're basically looking at here is this channel, this upper channel that has broken down. However, we are still, as predicted from previous videos, into this support zone here, and now we're just basically trading sideways before another move down happens. Now, this leads me to believe that there is a possibility that if we reach this support level here, where you have all this support, you have this support from this line here, you have this 200 moving average, you have the Fibonacci 382 here, that there is a possibility that we can still get to the 135.72. I know it doesn't look like it's probable, but it is definitely possible. And if the 50 moving average comes down into this 135.72, then that all the more so that I would initiate a short at this level here. Now, this is the chart of the US dollar. The only thing that leads me to believe that we may have an update tomorrow is that we should get a bounce off this upper trend line here on the US dollar. Now, keep in mind that this candle here is after hours, and this upper trend line here is one of the major trend lines. If we, however, break through this upper trend line here, then the market should see a lot more selling for tomorrow. Keep in mind, tomorrow is a low volume day. It's a Friday. Therefore, that gives the institutions a little bit more ability to prop the markets higher if need be. Now, the dollar is definitely in oversold condition. As you can see, this candle is moving in real time here. We are in, overbought conditions. So a pullback would not be, unheard of. And if we do get a pullback, then we should see further upside in the markets for tomorrow. Again, if we somehow are able to break through this upper trend line here, then the markets will fall, and we still have a target of 85.23 for the US dollar all the way up there. So there is a possibility, but definitely overbought scenario. So tomorrow, being that it's low volume, we may get an actual update tomorrow. One thing though to keep in mind, that a lot of people have not been wanting to hold over the weekend because of the Europe situation. So we may get a little boost tomorrow, and then a sell-off during the end of the trading day, only because nobody wants to hold over the weekend. Okay, so just keep that in mind. This is a chart of the daily on the VIX. The VIX has finally went and actually pierced through this 200 moving average. We created this doji candle. We do not have volume to indicate anything. However, we still do have this 29.35 upside. We came down, bounced off of this 20 moving average here, and this is where we are for now. This is a chart of the VXX. The only thing on the VXX is sometimes, it's supposed to be the ETF that tracks the VIX. However, it does act a bit weird, which is why I do not trade the VXX. However, if you notice, today's candle is higher than all the other previous candles, which indicates, a strong reversal to the top. Or because we've been coming down and we've actually been going higher, it's just really hard to read the VXX right now, other than just looking at what kind of volume we had on the VIX today. Okay. Now this is a chart of Facebook, and unfortunately for me, Facebook did not reach my target. It came pretty close to this 2618 level before it got a really beautiful bounce, and so this trade is now void unless FB was to come down tomorrow into this level. Then it might still hold up. This level might still hold up, but to be honest, around $22 is probably my next stop for Facebook if it ever gets down there. But it looks like it's already gotten a reversal candle here on pretty good volume. So the bottom might be already in Facebook. It really depends. If we get a down day tomorrow, then this guy will trigger for an intraday trade. If we get an update tomorrow, then this is definitely a voided trade. It did not make it to my level here, and that sometimes it doesn't do that. Sometimes you miss trades, but I'd rather miss trades than enter into early and then lose money. Okay. So what trades are still on the table? Well, Walmart is one of them. Let me load my drawings here. So we had first resistance at 65.47. I took this trade for an intraday trade, made some money off of that. I broke through the 65.47 level. Take notice, we did not close. Let me zoom in here. We did not close above the previous day's candle, which was yesterday. We closed right under that previous day's candle, which means we have a lower high in play. Okay, so that shows a little bit weakness. We are almost very close to the 67.70 level. This is, however, what you call a shooting star candle on very nice volume. Okay, so you see how volume here was it was this candle here, which showed that we had a lot of strength, right? And then we continued higher, and then we got this doji candle on almost no volume at all, as far as anything substantial. Today we have the shooting star on volume. This is, an indication of a reversal in Walmart, at least a pullback or some sort of consolidation pattern before we reach higher to the 6770 level. That's even as if we even get there. I mean, the only reason why I haven't taken the short on Walmart just yet is because Walmart is still stuck in relative strength. I mean, Walmart's up 38 cents. It was up over a dollar while the markets were, closed a little lower. Okay. I mean, if you look at the SPY, we're actually down 29 cents while Walmart was up 38 cents, which is basically a stock in relative strength. All right. And simply because Fridays and Mondays are normally low volume days. I mean, if we have low volume and institutions are able to prop the markets, then hands down, if Walmart gets up to the 67.70 level, then I'm taking a short. If it doesn't get there and it starts heading back down already, then you know what, I missed a trade. It didn't really reach the level like Facebook did. It was, this is actually quite a bit off here. But again, there is a possibility that Walmart can get up to the 67.70 level. But like I said earlier in the previous videos, unless we get some sort of consolidation pattern, which is what we're doing now, or some sort of pullback, I don't see it going straight into the 67.70 level. Now, depending on how long we consolidate to the side, um, well, if we consolidate, say we go a little higher and we consolidate here, then the 67.70 is off the table. But if we just starting tomorrow, let's just say we gap up right into this level, we open here and then we go right into this level, then I'll probably take the short and hold it over the weekend. Okay. This is a daily chart of Apple. Just like I said in the previous video, Apple seems to be the new gold. Everybody runs to Apple when people are trying to get out of the markets, and the markets were bullish earlier today. It was just the last two candles that sold off to put us in a negative territory. But while the markets were going higher, Apple actually went down, or is now trading sideways. I still have a level at 603.30 as well as 623.87, and this trade is still in play in my opinion. I mean, if you go back to the SPY chart, this is the 10-minute. It was just the last 20 minutes of the trading day. Nobody wanted to hold into tomorrow that put us in that negative territory. Okay, so this doesn't really mean much to me. There is a possibility that we can still go higher, like we did today. I mean, we came down and then we started going positive after that for the day. So I think we went positive from here. So and then the last 20 minutes we just took a big hit that put us back in the negative territory, and it's simply because nobody wants to hold overnight. Plus, two, we have the jobs report coming out tomorrow, which nobody wants to risk capital on. Okay. One chart that I kind of like right now is Wynn. If Wynn can get up to, and let me load my drawings here. The symbol is WYNN, Wynn Resorts. If we can get up to this 112.30 level here, which kind of goes right into the 382 level as well as a gap fill, and there's a possibility that the 50 moving average could come down here by the time we get up to this level here. If we can get up to this level, say the markets turn bullish either probably next week maybe, then I'll take a short on Wynn. So I'm just waiting on that. Okay. And then last but not least, we have GOD, which is the ETF that tracks gold. Gold, like I said in previous videos, we're just choppy, sloppy sideways right now. We're just basically consolidating in this choppy manner for another move down. Okay, so right now this calculated level here, it has been holding so far. I mean, what we got first hit, we got second hit, we got third hit. To be honest, the next time down, we may actually come down. To be honest though, this 20 moving average is coming right into price already. So this guy could already take a huge hit. Again, though, I'm not gonna trade gold unless we reach this level here. I mean, you just never know with the way things are going. I mean, if the dollar goes up, then gold will go down. But if the dollar pulls back, like it did, like it shows that we have pretty good resistance on the dollar right now, then I can expect gold to go higher. It could actually pierce through this 20 moving average and get to my level there, if the dollar pulls back dramatically. I mean, definitely overbought and a good resistance level. We'll just see what happens tomorrow on the dollar. Basically, everything's all about the dollar. Again, this dollar here, The resistance line that I got the dollar from was, the dollar resistance line that I got from was this consolidation pattern here that failed. Okay, this is a very strong resistance point in my opinion. We do have another one here, okay, which is a pivot point right there. Let's extend this to the right. And then we have another pivot point here. Extend this to the right. These are all going to be minor. This one's going to be actually major, the one up here. Send this to the right here, and then of course we're going to have double top here, which is going to be a really big one if we can even get there. Okay, so now let's just look here. Just kind of just zoom in here, and we can kind of see we're already into these two resistance levels here. Okay, and then this one up here is the double top level, and then you have my level here, which is 85.23, which is the calculated level. So already we're into pretty major resistance. I mean, for the dollar to pull back into the 20 moving average would not be surprising before we get another bounce higher. In fact, that's my expectation. I mean, seriously, in all honesty, if the dollar can push through these two resistance points, then the dollar is very strong, and the market is just it's going to continue to take a beating. Again, once it hits this 85.23 level, though, I may actually take a short on the dollar itself. We'll see, or I'll definitely go on long on the markets for a few days before before it goes even higher, possibly to this double top level up here. All right, so this is your 7-minute market update. Good luck to you all in your trading for tomorrow and for the rest of your trading career. I appreciate you coming by to watching this video, and I hope to see you in the next one. Thank you very much.